The market is currently closed, but the last reported closing price for Hut 8 Corp, trading under the Nasdaq HUT ticker, was $36.94 on Friday, November 14th, 2025, which reflected a gain of approximately plus 2.55% for that session. Now, the immediate expectation for a company like Hut 8, which is fundamentally a Bitcoin miner and digital infrastructure operator, is that its stock price movement should mirror the price of Bitcoin itself. When Bitcoin rises, HUT should rise, and when Bitcoin falls, HUT should take a hit, perhaps with more volatility due to its operational leverage. That's the common ground most individual brokerage users and those who self-investing through platforms like Fidelity or Robinhood are standing on. However, the reality is more complex, and here's the unexpected angle. The recent stock movement, particularly the strong pushback from lows after the Q3 2025 earnings report, suggests that a significant portion of the market is beginning to value Hut 8 less as a pure play, highly volatile Bitcoin proxy and more as a long-term, diversified digital infrastructure play with substantial embedded energy assets. This shift in narrative is the key development. While Bitcoin's price movements are still crucial, the market's reaction to the company's recent strategic update and financial restructuring is what's creating the current tension between expectation and reality, driving institutional attention. To fully grasp this, we have to look closely at the recent trading action. The stock has been highly volatile, which is par for the course in the Bitcoin mining sector. On November 14th, the $36.94 close came at the end of a session where volume was robust at over 10.5 million shares, slightly above its 30-day average. The stock traded in a wide range that day, from a low of $33.70 to a high of $39.90 before settling. This volatility confirms the battle between short-term traders reacting to the crypto market's daily swings. Bitcoin has been struggling to hold above $96,000 recently, which tends to spook sentiment, and longer-term holders accumulating shares based on the company's non-mining business segments. The broader crypto market sentiment, as evidenced by a fear and greed index in extreme fear territory at a score of 18, should logically be dragging Hut 8 stock lower. Yet we saw that strong 2.55% rally on Friday, even as Bitcoin itself was under pressure. This tells us the stock is decoupling, at least partially, from the immediate fate of the underlying asset it mines. And that unexpected resilience is what long-term shareholders are betting on. The Q3 2025 earnings report released earlier in November was a major catalyst for this change in perspective. The company reported a net income of $50.6 million, a remarkable turnaround, and a significant beat despite the headwind of increased network difficulty from the Bitcoin halving earlier in the year. The initial market reaction was actually mixed, which created a temporary dip, but institutional investors quickly moved to reevaluate. We see this in the institutional holdings data. As of the September 30th, 2025 filing, institutions like Vanguard and State Street were increasing their positions, showing increased conviction. The institutional buy-in during a period of market-wide hesitation suggests a forward-looking assessment of the company's shift in strategic focus. Their expectation is clearly that the stock is undervalued, with analysts setting a fair value target significantly higher than the current price. It's a classic case of smart money building positions, while retail investors, many of whom trade on platforms like Robinhood or SoFi Invest, are still focused on the immediate Bitcoin price feed. The core of this new reality is the company's power-first strategy and the development of its digital infrastructure and compute segments. This is where Hut 8 distinguishes itself from a typical single commodity Bitcoin miner. Their business model is now officially composed of 4 segments: power, digital infrastructure, compute, and the traditional Bitcoin mining side. The strategic pivot focuses on securing large-scale, flexible energy capacity, with a staggering pipeline of over 10 gigawatts under diligence. The idea is to develop dual-purpose sites that can switch between Bitcoin mining, which absorbs power when energy prices are low, and high-performance computing, for use cases like AI workloads, which offer a more predictable and higher-margin revenue stream. For a shareholder, this provides a crucial hedge against the volatility of Bitcoin itself. When Bitcoin's price is high, the mining operation is highly profitable. When Bitcoin's price falls, the infrastructure and compute segments provide a more stable foundation, leveraging their extensive energy assets to host high-demand computing for third parties. This kind of flexibility is a massive differentiator in a sector historically plagued by single-point dependency on the cryptocurrency's price. The revenue from the compute segment, for example, saw a huge increase year over year, driven by GPU as a service from Highrise AI, showcasing the early success of this diversification. The past performance of Hut 8 has been, predictably, closely tied to the cycles of the crypto market. Founded in 2017, the company built itself as a major Bitcoin miner, prioritizing a strategy of mining and holding its Bitcoin reserves. This treasury strategy, which stood at over 10,264 Bitcoin as of the last reported quarter, valued at hundreds of millions of dollars, is what provides the company with enormous balance sheet strength, enabling it to pursue its capital-intensive infrastructure plans. Previous years saw significant revenue volatility, particularly after the Bitcoin halving events, which slashed the block reward for miners. The company's long-term performance, however, has been stellar, with the stock returning nearly 100% in the 12 months leading up to the end of Q3 2025, far outperforming the S&P 500. This historical track record of managing operational costs and securing favorable energy contracts, such as the relationships with utilities in their Canadian operations, is what underpins the current aggressive expansion into the U.S. and the ambitious goal of managing over 2.5 gigawatts of capacity by year-end. This is not just a miner. This is an energy infrastructure play with a digital asset specialization, a concept that completely changes the risk profile for those looking at investment, including those using sophisticated tools on platforms like Interactive Brokers or simplified access through their Fidelity Investments brokerage account. Moving to the future outlook, the expectation versus reality tension intensifies. The expectation is that the next Bitcoin halving will be another major headwind, drastically cutting revenue and forcing smaller, less efficient miners out of business. The deeper reality for Hut 8 is that their operational efficiency and strategic focus on diversification could actually turn this industry headwind into a competitive advantage. Their fleet efficiency has been steadily improving, dropping from 20.1 J per TH in Q1 to a much more competitive 16.3 J per TH in Q3. When the next halving hits, the less efficient competitors will shut down, reducing the network hash rate and making the remaining miners, like Hut 8, more profitable, provided the price of Bitcoin holds or increases. The expansion into the massive U.S. markets, including new sites in ERCOT, MISO, and PJM regions, will drastically increase their scale and geographic diversification, insulating them from region-specific power or regulatory issues. This scalability is a key opportunity. The company is actively raising capital through an ATM equity program and credit facilities to fund this growth, which, while potentially dilutive in the short term, is necessary to execute the capital-intensive power-first strategy. Investors need to be aware of the trade-off: short-term share dilution for massive long-term infrastructure scale. The primary risk, of course, remains regulatory uncertainty, especially concerning the energy use of Bitcoin mining and the overall price of Bitcoin. If Bitcoin were to experience a prolonged, severe downturn, the asset on Hut 8's balance sheet would lose value, and the profitability of its core mining business would be significantly impaired. However, the compute segment acts as a counterbalance, offering a non-crypto correlated revenue source, a crucial factor for risk-adjusted return calculations. Another risk is the execution of their large-scale build-out. Developing multi-gigawatt power and compute sites is complex and capital-intensive, and delays or cost overruns could damage investor confidence. The strategic merger earlier in the year was a major step in solidifying its position as a dominant player in North American energy and digital infrastructure, but risk integration always lingers. For those of you who are constantly scanning investing sites, whether it's for a trade on Robinhood or a long-term hold in your Fidelity IRAs, you need to think about which of these narratives you believe. Do you see Hut 8 as a highly leveraged Bitcoin ticker, or do you view it as a rapidly scaling digital infrastructure provider that also happens to mine Bitcoin? The fact that the stock is holding its ground and attracting institutional interest even during recent Bitcoin pressure strongly suggests that the market is starting to choose the latter. The future performance of Hut 8 stock will likely be determined not by the next $5,000 move in Bitcoin, but by the successful deployment and monetization of its new data center capacity in the American markets. The sheer scale of their power pipeline, 10.8 gigawatts under diligence, is the true underappreciated story here. The market narrative is simple. HUT is a Bitcoin stock. The reality is that HUT is an energy infrastructure and compute stock with a Bitcoin hedge and a